Hi, welcome to the Market Alert for Monday, the 13th of May 2019. Friday, we'll start off with the Dow. Again, we saw prices moving lower after the trade deal failed, which was the last point we covered in Friday's alert. And then you see the exact same pattern as we saw on Thursday. Let's go back to Thursday's session. The repeatability is quite something. And just to wind back, that was when we showed that the deal had actually fallen through. And here is that same pattern. Market lower, and then the market is brought back. So let me just reset the chart as I want to show you the overnight, where we've got the market gapping down again. So on Friday, we saw the same pattern, and that's because it was the same news. I'll just bring this up for you. Let's have a look. Yeah, stocks saw after Trump tweets China talks constructive, although no future talks scheduled. I mean, this is just utter BS. There's no other words to describe it. We see the market sailing to the downside on the failure from the night before, and then we see the market being brought back. And this is one hell of a range. I mean, from the low here to the close is 543 points. And that's just based on a tweet. They are that desperate to keep this market on the upside. Anyway, over the weekend, odds point to a worst case scenario. Shock traders respond to latest trade war twist, and we see the futures contract down on the overnight. Market's gap down, so it's likely to fill this gap, but at the moment it's still showing some weakness here. It needs to close above the 200 bar moving average to move higher. But have we reached the tipping point with this market? As we look at the daily chart, we're nowhere near the high of Friday. The market gapping lower and starting to move lower as well towards the 76% retracement that we've had drawn in. I'm going to keep these downside targets in. Market hitting the 25,503 on Friday as well, and heading back towards there by the looks of things. And interestingly enough, let's go back to the implied volatility. This actually dropped from 1734 down to 1539, and that's because, as ever, I'll just jump to this. This is the VIX, the volatility index. This is what the Fed have been using in order to keep the market propped up. They sell heavily short VIX futures contracts, and you can see on both Thursday and Friday they sold the market short in this instrument, and that immediately reverses the market, and you see prices moving higher. So that's all that was required to switch from the downside weakness that we saw to send the market moving back up 500 points. As I say, this is absolute desperate measures, and Trump of course wants to reduce interest rates, or get the Fed to reduce interest rates by 1% and start QE4, which may sound great initially, but after a while the medicine isn't working and the market will eventually find its fair value. So let's see what happens today. There's no news today. There's just FOMC member Clarida speaks, but other than that, there's no other main news there. And then in the pound, not a lot happening. All about Brexit and European elections now. So the pound struggling a bit sideways, barely putting out a 50-point range or pip range on Friday, and then moving back to where it started from by the end of the day there. And the star of the weekend is Bitcoin. We've got the volatility back that we've been waiting months and months and months for, and this happening over the weekend. The market shooting up on Saturday. Some profit taking during yesterday. You can see the selling volume there is greater than the previous day, so there's a bit of a respite there. But now this is starting to get the attention once more of the news outlets. And if we have a look, if I can find it, yep, Bitcoin soars above 7,000 as crypto comeback continues. Wait for this to get back to those all-time highs in the weekly chart, which you can see here, going back to December of 17, 20,000 there. Let me just get rid of that one. 20,000 level, a long way to go. I mean, there's lots of resistance in between all of this, but there's the all-time high. And the reason I'm mentioning this is if and when we get to this level, then it would really start to get motoring, but it'll be a good run up to here as well. And if we look on the intraday, this is what I've been talking about. This is what I've been waiting for and talking about in the alerts, is where you see the winning trade after winning trade. This one is not valid because you would already be short on the other ones, but the range of these bars are nice now. They're not that sideways that we've had for a while, that we saw all the way through last week, this sort of thing where it's just stuck in a range, and less than this, of course. So this is Sunday, where we see the profit taking coming into the market, and overnight the market pulling back to the 200 bar moving average, just heading there now with a bit more profit taking. Wouldn't be at all surprised to see a pullback in this market, to be honest with you, having moved significantly higher from here. This is where the market tested. If we just go from this low up to yesterday's high, then $2,600, the market needs to pause and show a bit of profit taking on the short side there. But at the moment, in the 15-minute, the market's got to break the 200 bar moving average there. Not a good entry point when we know what happens when markets get to the 200 bar moving average. They tend to reverse and move back to the upside, which you can see in the previous occasions where the market's traded down to this level. It's been above it for some time, so it does need to have a bit of a break and pull back. It attempted it on the overnight there, which we see here. Just to reset this, there you go, so you can see there. So yeah, certainly interesting. And then of course all of the central banks as usual, the rhetoric coming from them. I'll just find the one. As crypto saw, Super Mario Draghi warns not currencies, they're very risky assets. Really, talk about breathtaking hypocrisy. This is a man who's been printing currency, not money. Money is physical cash. And since 1945, where there was 97% cash to bonds and printed assets, it's now the other way around. 3% is in coins and notes, with 97% being in toxic bonds, is the only way to describe them. 60 billion a month for the last 3 years. They stopped in December of last year. And he has the audacity to say that cryptocurrencies are not currencies, they are very risky assets. That's because they have no control over it, and that's why you get this sort of language when Bitcoin starts to move. So this is also healthy, actually, to see this. They're not... I mean, all assets carry a risk. I mean, there's no doubts about it. I mean, until it becomes established, it is a risk. But so is crossing the road when a bus is coming as well. It's about... quantifying the risk, but it's the language is interesting. That's why I've shown this. It doesn't surprise me one bit from this central bank. It'll be the same from Carney, from the Fed with Powell. Once the Bitcoin market gets back to the 20,000 level as well, so be prepared for it. But the good news is the volatility is back in this market. See what trades this is going to produce today. You may need to review some of the videos on how to place the trades, etc. It's been a while since we've looked at this market, but it's certainly back. Or you may want to err on the side of caution until it really gets going and paper trade it for the time being as well. Nothing wrong with that. just to get a feel for how things work, and also use the BitMEX demo account as well, just to make sure that you're familiar with how things work before even considering jumping in. Get back up to speed there. Okay, that will do for this one. Things certainly livening up during May, that's for certain, and let's see how long it continues, and long may it continue. It's been a bit of a famine as far as Bitcoin is concerned, but lots happening in the stock market as well. The pound going a bit quiet, but certainly things are picking up a bit. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.